work. We have a Citi note today that's optimistic, but you wouldn't really know it based on price. I think that simply put, probably with the overall market lower, that's the explanation. But analysts do still see some favorability here as a result of some of the trade turbulence hopefully coming now behind us for NVIDIA.
They see quite a bit of upside, actually. They raised the price target to $190, up from $180. They maintain that buy rating. So that implies about a roughly 15% upside from current trading levels, even though they are down about 0.6% right now. What they're saying driving the increase is this major expansion for AI demand and infrastructure, particularly from sovereign governments. That's where they're seeing the huge potential increase. So Citi's now assuming that their total addressable market for 2028 for data center semi-AIs to reach $563 billion. So that's 13% above the prior expectation. And their networking TAM up $119 billion, up from $90 billion. So that would indicate a sharp sales increase for NVIDIA. They're really expecting things to grow. Data center revenue, they also raised for fiscal year 27, up 5%, 11% for fiscal year 2028. Networking sales are expected to project 12 and 27% growth, respectively. Gross margins, they're forecasting to continue to expand, normalizing in the mid 70% range by year end. So a lot of heavy boosts here. Also noted concerns about any bottlenecks in their supply chain have seemed to ease. They did flag some downside risks, obviously, and partly why I think we're seeing some drop on this positive note is renewed export restriction concerns and what might happen with these tariffs. But that seems to be hopefully a temporary issue for them, as most of this is long-term projection that all seems to be favorable for NVIDIA.
Yeah, great marketplace to be in. I mean, they adjust the one aspect of the business by $63 billion, and they see that creating another $250 billion in market cap. If it were to get to 190, not even 180, that would be another $750 billion thereabouts in market cap. So we're talking almost $1 trillion in additional upside for the world's, either depending on the day, largest company by market cap or second.
I mean, as of close Thursday, they were at $3.89 trillion. They're just shy of that $3.915 trillion closing record from Apple. I mean, they're marching closer and closer to that $4 trillion market cap, every single day.
And also then moving away from even second place, which is Microsoft. I agree, Alex, that it's like one of those things I'll nervously say and then go back and check, because it's like every day it does feel like you're competing with even like your Apples, Microsofts. But now as we see, even with the pullback today, firmly as the world's most expensive company as far as market cap. I mean, it's difficult to even find them the number two, and I know that's what everyone seeks to do in the AI arms race, as I know we coined it. But finding that number two right now has just been difficult because it seethis like it's NVIDIA and it's everyone else.
And then the race. And then the race for everyone else, yes.
Yeah, and I also think with that being said, I mean, as far as even like conviction goes, I know that with this positive note today, it doesn't feel like we've gotten a whole lot of pessimism from the sell side as of late.
No, not really. And, I think an indicator for them, too, a safety indicator, is the other semiconductor stocks also open lower today. I know you were talking about AMD earlier. Intel, Qualcomm were both down more than 1%. I think a factor weighing on them right now also is that earnings from Han High Precision Industry, which is business as Foxconn, is coming out. That Taiwanese company reported second quarter revenue on Saturday, but it flagged some major macroeconomic and geopolitical conditions and exchange rate fluctuations as potential headwinds. So Taipei listed shares did close lower on Mondays, but I think that could be a little bit of why we see a bit of downturn here as well.
According to the most recent price objective set by a Citi research analyst who believes that the artificial intelligence market is only going to grow, NVIDIA's stock might rise by another 20%. Awesome. Atif Malik of Citi raised his price target for NVIDIA stock from $180 on Monday to $190. Malik now has $563 billion, as the undoubtedly 2025 has been a turbulent year for investors so far, and NVIDIA is a shining illustration of this. The stock fell 37% from its peak after rising as much as 11% to start the year, although it later reached new highs. The historic volatility has been caused by worries about the effects of tariffs, the ongoing inflation, and the unresolved trade war. Despite growing competition, NVIDIA's chips remain the industry standard for AI processing, making the business the de facto standard bearer for the AI revolution. In actuality, NVIDIA's stock has increased 990% since the adoption of AI really took off in early 2023. With a market valuation of $3.86 trillion, NVIDIA is now the biggest publicly traded business in the world. But more might be on the horizon. According to a Wall Street analyst, NVIDIA has the potential to become the first $20 trillion firm in history, which would provide an extra 400% upside. When NVIDIA invented the graphics processing unit, GPU, in 1999, it completely changed the video gaming business. The development of parallel processing, which enabled these chips to perform numerous mathematical computations concurrently, was what set them apart. This accelerated processing time by allowing the chips to split computationally demanding tasks into smaller, easier-to-manage chunks. They were soon the most popular option for AI since it turned out that those blazingly fast processors could be used for a wide range of other computer activities. NVIDIA chips are more than just the industry's top hardware. Its software architecture and Compute Unified Device Architecture (CUDA) programming platform assists developers in maximizing GPU performance. With the aid of NVIDIA's more than 400 libraries, developers can build, optimize, deploy, and scale applications across PCs, workstations, the cloud, and supercomputers using the CUDA platform. NVIDIA has established itself as the industry standard and developers' first choice by assisting them in utilizing the GPU's full potential. In addition to gaming, clouds, data centers, and machine learning, an early branch of artificial intelligence, all employ NVIDIA's chips as the industry standard for GPUs. NVIDIA is still the best option for generative AI, and developers are accustomed to CUDA. With a market valuation of over $3.86 trillion, NVIDIA is presently worth $20 trillion, indicating a 418% increase in stock price. Wall Street estimates that NVIDIA will make around $200 billion in fiscal 2026, which would translate into a forward price-to-sales PS ratio of about 19. To support a $20 trillion market cap, NVIDIA would need to increase its revenue to about $1 trillion, assuming its PS stays the same. Over the next 5 years, Wall Street now projects that NVIDIA's revenue will expand by 21% annually. The corporation may reach a $20 trillion market valuation as early as 2035 if it can sustain that rate of growth. To be honest, NVIDIA's chances of meeting this high standard are slim because several things would need to go perfectly. An optimistic view, but according to one Wall Street analyst, the odds are more than favorable. Former Boston Consulting Group CEO Philip Panaro predicted that NVIDIA will reach $800 by 2030. The market value of this is only around $20 trillion. The analyst identifies 3 key elements that will contribute to NVIDIA's ascent to $20 trillion. The present adoption rate of AI is less than 1%, according to Panaro. In the end, a low to mid-single-digit adoption rate would increase NVIDIA's worth 5-fold. According to Panaro, businesses will spend almost $10 trillion between now and 2030 to implement Web3, the next blockchain-based version of the Internet. Given that only roughly $1 trillion has been spent so far, he estimates that NVIDIA still has a $9 trillion data center opportunity. The Department of Government Efficiency's, DOGE, duty to identify and eradicate waste, according to Panaro, would reinvent how government is managed and delivered. Since the development of digital twins for over 300,000 government buildings could result in significant cost savings, NVIDIA has yet another fantastic opportunity. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. According to Panaro, these prospects will propel the revenue expansion required to sustain NVIDIA's $20 trillion market valuation. An unrealistic forecast? Although Panaro makes a compelling argument, I don't think NVIDIA will be able to achieve his ambitious objectives. Nevertheless, the corporation might still be a profitable investment without reaching a $20 trillion market valuation by 2030. It's also important to keep in mind that NVIDIA is very volatile because fair-weather investors typically leave the company at the first hint of difficulty. The stock's 37% decrease earlier this year and its 66% plunge during the 2022 economic collapse serve as ample proof that investing in NVIDIA is not for the timid. On the plus side, though, the stock is now trading for 28 times next year's earnings, which is a strong opportunity for a business with this kind of potential. I am a committed NVIDIA supporter. The stock is my second largest holding and makes up 12% of my portfolio. Although I think the company has a lot of potential for the future, I also think there will be challenges along the way. Even though NVIDIA's market capitalization might not reach $20 trillion in the coming years, the stock is still a great investment. Total addressable market for data center AI chips by 2028. That is more than the $500 billion he had previously predicted. The quick development of sovereign AI, or nations aiming to develop their own AI infrastructure, presents an opportunity for NVIDIA. This business may boost NVIDIA's earnings by billions of dollars in 2025 alone, and Malik believes that next year, sovereign AI will account for an even larger share of NVIDIA's business mix. According to Malik, NVIDIA is involved in almost all sovereign deals and has a line of sight to tens of gigawatts for enterprise and sovereign AI plant buildouts over the next few years. As the firm resolves some of the problems associated with the early rollout of its new Blackwell platform, he is optimistic that NVIDIA will be able to increase its adjusted gross margins back to figures in the mid-70% area by the conclusion of its fiscal year. Referring to the company's older and newer Blackwell products, he said that NVIDIA is also optimistic, basing that belief on what it has observed in terms of the Blackwell ramp for the GB200 and what it anticipates the GB300 ramp to be in the future. Malik, however, believes that NVIDIA faces danger from possible new regulations from the Trump administration that would limit the export of specific AI processors to Southeast Asia. According to a Bloomberg story last week, President Donald Trump intends to stop sending sophisticated semiconductors to Malaysia and Thailand in order to stop middlemen from smuggling them into China, where the United States has barred their sale. According to Bloomberg, which cited anonymous sources with knowledge of the situation, the decision is not final and may alter. According to Malik, the chip manufacturer may face some risk as a result of the prohibition. Nonetheless, the Citi team thinks NVIDIA has effective methods for monitoring its GPUs. According to Dow Jones market data, NVIDIA's stock dropped 0.7% on Monday, moving further away from the $160.46 barrier required to reach a closing market valuation of $4 trillion. At its closing price of $158.24, the stock was valued at $3.86 trillion. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
I mean, I just can't get over just not only how successful this company has been, but also when you look at it from an activity standpoint, it's so far and away the most active stock now too. 90 million shares changing hands. 1 million in some change options contracts changing hands a day. All the while, it continues to outperform. It continues to lead this market higher. But it's like the perfect stock to do it. It's the biggest one. It's volatile. It's the one that seemingly everybody trades and invests in. Like, if you were to pick one name out of the S&P 500 to be your leader, like this is the one many would pick. And that's why I think, to Jenny's point, there's so many questions like, what's going to hold it back? But like no one seems to have the answer other than, oh, this is a hardware company that's getting pretty expensive. And we've seen that before. .com comes to mind, names like Cisco. But it not only, weathered a period of volatility, Marley, it came back to it and set a new high. Like that didn't happen in .com.
No, I mean, I think they're showing they have a lot of potential upside. Interestingly enough, you don't see these huge price target increases when we talk about NVIDIA, I think, because they're already so expensive. So you see a $10 increase. A lot of the time on this show, we're talking about they got a $50 bump.
Mm-hmm. Right.
And so these are always a little bit smaller. It always has that buy rating. But, it does imply a 15% upside. So I think we're just going to continue to see this unless there's some, macro change or we get more information on tariffs one way or the other. But I think that's what we'll keep seeing are these small moves to the upside every single time. And like you said, Alex, there doesn't appear to be anything stopping them. There's no glass ceiling in sight.
There does not appear to be. I mean, I know that right now the overall situation, economically speaking, could always evolve. But you see right now it's 200-day and 50-day, even more impressive, moving averages consistently moving to the upside. I mean, a name that's now 1.5% off of those all-time high levels. And we'll have to see if they can now top that previous record for market cap, which is we're right around those levels, even with a pullback today. So lots to be excited about, I guess, if you're a believer of NVIDIA and some of its